maybe on the other side, it's an opportunity to buy them back. Here now is Harry Rady, CEO of Rady Asset Management, and Jim LeCamp of Macro Portfolio Advisors. Jim LeCamp, what do you make of this? I mean, this is not a new issue, but it is a new court ruling. So far, this thing has not stopped banks from rallying the last part of the year, but how do you see it?
Well, at the end of the day, these homeowners owed money. Even if it's a nebulous, nefarious quasi-entity, they still owed money. So if the regulators do the right thing, they will not reinstitute any mortgage moratorium on foreclosures, because that would be disastrous, not only for the housing market, but for local and regional banks. That would slow down lending. That would slow down small businesses from hiring, and it would be disastrous for the economy. So I don't think they'll do this, but if they take this step, and they use this as a political football to put another moratorium on foreclosures, it would be very disastrous. I
mean, Harry, okay, the banks lost some ground today, but they've had a very good last month or two. This foreclosure ownership thing and the robo-signing letters thing and who actually owns the property as well as the mortgage has been overhanging, Harry, as you know, for several months. But banks seem very resilient. And my pal Jim Cramer says, buy them back. This is much ado about nothing. Where do you come out on this?
Oh, I'm with Jim. This is much ado about nothing. This is a bump in the road. You know, we're long-term, contrarian, deep value investors, and this is right up our alley. You know, this issue is still in the low courts. It's one state. This is lawyers doing what lawyers do. This is a buying opportunity. You know, if you look at these things, if you look at the banks and put yourself a year from now, do you think the banks are going to be higher? Do you think that the economy will be better? I mean, this is expectations low, steepening yield curve, M&A about to boom. This is a clear-cut opportunity, absolute non-issue buying opportunity. Back up the truck.
Jim
Look, it probably is. He's probably right, but I think investors can't get complacent about this because there's way too much housing inventory. Look at what we've done already. We've kicked the can down the road 1,000,000 times. We've muddied up the foreclosure process. Now we have rising interest rates as well, and that has slowed down foreclosure. That's slowed down the mortgage industry as well. So these local and regional banks, they aren't out of the woods yet. And while I agree this probably won't result in another moratorium, I think investors need to be very, very careful with this because we can't trust our politicians these days to do the right thing. And so, yes, there is value being created, but mostly in the large banks, the banks that can spread this out. The banks like Wells Fargo, J.P. Morgan, Bank of America, Citigroup, they have a broad enough business plan to where they can withstand any jockeying by regulators. These local and regional banks are still hurting, and they look a little bit better, but I think you have to be very careful here.
All right, you guys are basically agreeing with each other. I hear that. All right, Harry, let's move on. Let's have some fun here. Turn this into a stock market segment in general. The market basically shrugged off the jobs number today, which wasn't all that bad. And one of my themes in recent weeks is that the end of the world trade is not panning out. The dollar's going up, gold is going down, the economy's looking better, Washington, D.C. is looking better. Harry, you sound optimistic, and I'd love to get an investment strategy out of you this evening. What's your best picks? What's your best sectors?
Well, the theme for 2011 is going to be M&A, and people are expecting M&A, but I don't think their expectations are high enough. M&A is going to explode. So we're looking at sectors where we think M&A is the most likely and where the most upside exists and where expectations are low. So the financials are one area. You know, we're buyers of Redwood Trust, Western Union, we own Goldman Sachs, Morgan Stanley, Bank of America, et cetera, et cetera. We own the drug and biotech stocks, Cephalon, Warner Chilcott, you know, those types of stocks. We're starting to buy the defense stocks. We own Flourish Systems. So you see a theme developing, sort of high-quality, mid-cap companies that have the potential to be acquired, that have dominant, strong franchises.
Jim LeCamp, what's the glitch in the story? You know, in the last segment, we started to talk a little bit about new market signals showing some very bad stuff out there in the European debt issue. The Greek bond spreads look bad. Portugal looks bad. Spain looks bad. Might that be enough to derail this very ebullient, positive, bullish, early New Year stock market psychology? What you thinking?
Yeah, the glitch is that everybody's crawling all over themselves to see who's the most bullish here. We have to be very careful. Yeah, maybe the world is not going to end, but as you pointed out, credit default swap prices in Western Europe are pointing to problems. Yields in the Western Europe are absolutely skyrocketing here, and they're getting up to crisis levels. These problems have not gone away just because they're off the boil perhaps for the moment. Also, remember that rising interest rates, although they are signaling economic growth in the U.S., they will slow down lending at some point and slow down the housing market, which is already in trouble. Finally, Larry, you and I talked about this. There's serious problems in other parts of the world, like Japan and Iceland. So yes, we're still long, but we are still bullish on some of these end-of-the-world type trades like gold and silver, because we think that these problems have been kicked down the road, but they're not going away.
Harry, all right. An interesting statistic, business loans, C&I, commercial industrial loans, are actually rising in the last couple of months. I mean, they're not up enormously, but they're up about $15 or $20 billion. It's really the first evidence of a turn-up in business lending. And coming back to your bank theme, this is also an economic growth theme. And I just wonder, is it possible that 2011, the economy will actually outperform? I know people are bullish, looking for, say, 3.5%. What are the odds that the economy could actually grow by 4 or 5%, at least for a couple of quarters?
I think it's very possible. I mean, you know, with the steepening yield curve and these banks having had an opportunity to backfill their balance sheets, you know, many of these banks are overcapitalized and now can use the opportunity to make acquisitions, to finally make loans. I mean, this steepening yield curve is a license for them to print money.
Even a banker can make money when the spread between a 0 short rate and a 4 or 5% long rate is this wide. Even bankers can make money. Is that what you're saying, Harry Rady?
Yeah, and I got one more sector for you to consider.
Why are they closing down so many of them?
They have to.
They're still closing down local and regional banks.
There's too many banks in New York. I'm sorry. Go ahead, Harry.
The strong will get stronger and the weak will go away.
Schumpeterian gales of creative destruction. How about that?
I got one more sector for you. You know, we see this commodity boom, and one sector that hasn't moved yet, that's a late cycle that we think is ready to move, are the shippers. You know, we own stocks like Frontline, Overseas Shipping Group. The shippers are trading below NAV, below book value, 52-week lows. We think that that's a backdoor way to play the commodity boom that hasn't been identified yet.
All right, yeah, because the prices of those commodities are going to flatten out and dip some because the dollar keeps going up. So that's a very interesting point. Gentlemen, you're terrific on a Friday evening. Harry Rady and Jim LeCamp, thank you very much. Coming up on the Cutler Report, 2 exclusives tonight. The CEO of Diamond Offshore, Larry Dickerson, on the bullish call from Gold.